I was stuck losing in trading for 2 years until I found this easy scalping strategy that literally takes less than 1 hour of my day. I have never ever shared this strategy to anyone before, but fuck it. Now I'm gonna teach it to you, and I'm gonna actually break it down to 3 simple steps. And if you have checked my channel before, I actually post my live trades consistently with this strategy, so I know what I'm talking about. I am not like all these trading gurus who just teach you some random strategies and never do it themselves. I actually walk the talk. But anyways, enough talking. Let's get into the charts. I'm gonna teach you everything. So the first step is the trending stage. So there are essentially 2 trends you need to see in order for you to look for some buys or sells. So first of all, there's the downtrend. Okay, downtrend moves like this: lower lows, lower highs, lower lows, lower highs, lower lows. Let's continue. Lower highs, lower lows, lower highs, low lows. As you can see, it moves constantly, and this is called a strong trend. So it's a strong downtrend, and in this scenario you have to look for sells. And then right here, this is called a strong bullish uptrend. It's a very strong bullish uptrend, and in this scenario you have to look for buys because it creates our higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows, and a little bit sideways movement, and then it continues. As you can see, higher highs, higher lows, and etc. and etc. And obviously in this kind of scenario you have to look for buys because this is called a strong bullish uptrend. And the simple reason why you need to buy and follow the trend in the uptrend is for the simple fact that these trends will continue. And as you can see, they're very consistent. They move like this to the upside in higher highs, higher lows, and same as in here, lower lows, lower highs, lower lows, lower highs. They move constantly. And what you can do is you have to, every time there's a new lower low created, keep in mind that you have to seek out for the retracement. And essentially, look at this. Since this is the downtrend, right? A downtrend is created by lower lows, lower highs. Now this big move is called an impulse, and the smaller move is called a retracement. And after there's a retracement, you have to keep an eye on the most recent low. Look at this lower low. So this right here, this is called a low, and this is a lower low, lower high. When you see another lower low being created, this is something called a break of structure. So you can sell right here. How is a break of structure being created? When a down candle, literally this down candle, closes below the most recent lower low. As you can see, it closes. That's called a break of structure. You can enter right here. And then if you miss this trade, you can just wait for another retracement. As you can see, these are lower low, lower high. This is our retracement. It's the smaller move, and then this is the low low, as you can see. And when it breaks structure like this, boom, right here, you can enter, put the stop loss above the most recent, above the retracement. So lower low, lower high, you put the stop loss above the lower high, and you can enter and follow the trend. And obviously the trend continues. This is the same shit. Look at this. This is another break of structure right here because this is lower low and retracement, and this break structure. You're gonna follow the trend. You can enter right here and target somewhere here. Simple as that. And in the uptrend, the same stuff. As you can see, this is our higher highs, higher lows, higher highs. This is right here is our higher highs. You're gonna buy it right here because this is our break of structure. It confirms that the trend continues. Look at this. This smaller move to the downside is the retracement, and then after it there is the break of structure. The up candle closes above the most recent highs, higher highs, and this is our new higher high. So you're gonna enter right there, and stop loss, you'll put it below the most recent higher lows right here, and you can target, follow this trend. Very simple yet so effective. And the step number 2 is consolidation. There's a trend that you don't necessarily want to see when you're looking for trades. It's something called a consolidation. So it's this kind of movement. It's when the price moves sideways. Look at this, it moves sideways, and this is exactly when you don't want to necessarily look for sells or buys, because the trending moves consistently, and in this scenario it will move consistently like sideways until there's the volume change, which happened from here, and then it just booms and continues to go up. Uptrend, strong uptrend. This is a strong consolidation, right? You don't want to look for buys in here, and I learned from the hard way because every time that I look for buys or sells in sideways movement, I always lost. So obviously you cannot make money if the price ain't moving, okay? And consolidation can be happen in 2 scenarios: when there's equal amount of buyers and sellers, and which pushes the price to up and down, which means the price cannot move anywhere because there's equal amount of pressure in the markets. And obviously it can be caused from lower volume. Nobody wants to enter the markets. That means the price won't move. So you cannot look for buys or sells in here, but here you can look, okay? Step number 3 is the trend reversals. I remember back in the day when I was unprofitable, I thought that, okay, if I follow the trend to the upside right here, like this. This is our high highs, high lows, high highs. It will probably continue up from here, so I would have a body from here to target here, but as you can see, there's a reversal, meaning trend reversal. Why? Because there's something called a liquidity sweep. Liquidity is essentially what these big banks, institutions, and hedge funds want to seek for, and they want to take it to liquidate people out from the market, and then they can switch the trend direction, at least momentarily. And as you can see, what happens here, there's the trend switch, and now we start to create our lower lows, lower highs, and lower lows. And what happens here, this is another liquidity sweep. What happens here, then it starts to create our consolidation, and then higher highs and higher lows and higher highs and higher lows. And as you can see, we literally then sweep this liquidity, and then look at this, we start to create our lower lows, lower highs, and lower lows, lower highs, and lower lows. It's simple as that. And this is literally how the trend can switch direction. So you have to seek out liquidity in order for you to find trend reversals. Okay, and I'm going to show you how can you spot these liquidity areas. So essentially, liquidity always rests above highs and lows, and these highs can be created by 2 candles and lows can be created by 2 candles. I'm going to show you how can you spot highs and lows. So pretty much a high is being created by 2 candles. First one is the up candle, it's created like this, and the second one has to be a down candle, which is like this, right? So above here, above the high, there's liquidity in the higher time frames. So I would say above 50-minute time frames, there's a lot of liquidity above these highs, and obviously below lows there's always liquidity as well. And a low is being created by 2 candles. First of all, has to be the down candle, and the second one has to be an up candle, right? So below lows there is liquidity. So below here is our liquidity, right? And let's say we're currently in a downtrend. We want to look for shorts, we want to sell the markets, because obviously these are our breakout structures to the downside, and we want to look for sells in here and target this liquidity area. Because why? Because when we actually reach this liquidity area, look at this, like this, a lot of orders will get filled, and there's a huge chance that the trend will switch its direction. But obviously you cannot buy it straight from here, because you have to see something called a trend switch confirmation. So when there is the liquidity sweep like this, and we see the downtrend previously, we have to spot our most recent lower high like this. And when we break structure, a up candle closes above the most recent lower high. As you can see, this is our lower high like this. Then right here we start to look for buys, because this is our new higher high. So higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And let's say if you miss the trade right here, first of all, you could have bought it from here, but if you miss it, you can just re-enter on another breakout structure like this, because this is our higher high, and another higher high, because this higher high closes above the most recent higher high. If that makes sense, it's nothing rocket science or anything. It's very easy and simple. We could enter right here and stop loss below the most recent higher low like this. This is our high low. I'm gonna put it to the stop loss below there, and you target some liquidity above here. So that's the key. As you can see, pretty much we had our highs in here, because this, look at this. First of all, what is this? This is an up candle followed by a down candle. So this is a 1 hour time frame, and this has a lot of liquidity right here. Liquidity, what these big banks, institutions, and hedge funds are seeking for constantly. They want to liquidate people out from the market. When we sweep it, we immediately see the break of structure. Remember, look at this. What was this? Higher highs, higher lows, higher highs, higher lows. Remember the higher highs, higher lows. This is our high low. And look at this. After the sweep of liquidity, the down candle closes below the most recent high low. So this is a breakout structure to the downside after the sweep of liquidity. And right here, what would you do? You want to go to the lower time frames and start to look for entries for the trend respect in the downtrend. And I can literally just show you. So in here, I would go to, let's say 5 minutes in this case. Okay, let's say 5 minutes in this case. Look at this. This is our most recent low. We want to see a breakout structure to follow the trend, right? Okay, there's not yet. And now, look at this. We create our new low, and this is now a lower low because it broke structure below the most recent low. Look at this. This is our low, lower high, lower low. We're gonna enter right there. And I would pretty much target from here, and the stop loss would be above the most recent lower highs right here. This is a lower high, so we're gonna put the stop loss right here, right there. And where would I target? I would target some of lows in here, because these lows also have some sort of liquidity. So I'm gonna put this. Why is these lows? Because down candle followed by an up candle. I'm gonna put the take profit right there and target these. So this is a nice 1 to 2 reshort ratio almost. Let's see what happens. And there we go. This would have generating me a lot of money in the markets. And that's literally backtesting. I literally show you how you can actually do it step by step. So that's literally all you need to master my scalping strategy in these markets. I do it every single day. Click the first link in the description. It will get you to my free course, and there you can actually learn how to make at least $10,000 a month with trading. Okay, man, thank you for watching. As usual, I'll see you on the other side. Peace out.